Happy Friday before Halloween. Kelly Jones here, Russell Realty Group, eXp Realty, and I have brought special guest Larry Davis from Prime Lending to talk to us today about the market. This is going to be really important for buyers because I know it's been a little bit wonky because the past couple of years was, not really normal, right? Rates were super low, multiple offers. It was hard to get in a property now. Sellers are like, buy my property because rates are so high, right? Yeah. So Larry, I'm gonna take it away, but tell me first, when's the last time, or talk to me about rates, like how they fluctuated over the years.
Yeah, I'm glad you asked that. Actually, I have a little chart for that if I can share it.
Great, yeah, please.
Let me just pull it up here. Okay, let me know if you can see that, Kel.
I can see it.
Okay. So when we started the year off, coming through COVID, rates were at all-time lows. And in January, we were still in the low threes. And recently, we've locked loans as high as 7%. So that's more than double since January. And it's not just an affordability issue. I think it's kind of a mental thing with buyers when they see rates at 7%. And if you look at the chart that I pulled up, this goes all the way back to 1971. And if you go back to 2006 through like 2008, we were seeing rates, in the mid sixes, 6.5 to 6.75, paying some points to get that rate. That was, before the housing bubble. And then after that, coming out of the crisis back in 09, 2010, we saw rates come down, of course. I don't think the prime rate in the United States changed for like 9 years. So things were so stable. Coming through COVID, they were at all-time lows. And now, we're here, where are we at 7%? So for every 1% on an average $500,000 to $600,000 loan amount, that's about $400 in payment. So since January, if a home buyer was pre-approved for that kind of a loan amount, they've seen their payment go up by about $1,200 a month. So it's a big increase.
Yeah, absolutely. And now a lot of buyers are, sticker shock almost, right? They don't really know how to handle it because they're like, shoot, I should have bought, right? And now they're waiting for rates to go down again. But, talk to me about a little bit about what do you expect with rates, and then what can buyers do? I know there's certain programs that lenders, are really big on right now, helping buyers getting into properties. Talk to us a little bit about that as well.
Yeah, so there is some programs that are coming out to kind of offset these higher interest rates, and we do have kind of a standoff in the market. You've had sellers that refinanced during COVID at 3% and under, and they don't want to necessarily sell their home and go have to buy a house and pay 7%, correct? But you have buyers who don't want to necessarily pay 7% at these current home prices. So it's kind of a standoff per se, and it's kind of a dynamic we've never really seen in our market. So what lenders are doing, we're rolling back out the ARMs. Kelly, you're probably well aware of the 5, 7, 10-year ARMs.
Yeah. So
instead of the high sixes, we're seeing those high fives right around 6%, and sometimes at 0 points, which is nice. So it's cost effective for the buyer. Where fixed rates, when we're locking those right now, even in the high sixes, they're paying 1 to 1.5 discount points, which is a percentage of the loan amount that they borrow. Now they do get to write those off, the first year when they buy the home, but still, it's a lot more out of pocket that they need to come up with. Right. So again, these adjustable programs are rolling back out, and then also, Kelly, you and I discussed earlier in the week the temporary buy downs. We can do all the way down to a 3-2-1 buy down or a 2-1 buy down. What that means, and for the sake of time, I was going to try and pull out some charts here, but I'll just kind of explain it real quick.
Okay.
So what the seller can do is offer to basically subsidize the first couple of years payments for the buyer. So let's say we have to lock them at 7%. We can bill them at 5% for the first year, 6% for the second year. Then it hits a note rate of 7% the third year for the remainder of the loan. So those difference in payments for those first year and second years, the seller can pay that at closing. That way the buyer can literally save, on an average loan amount, it's about $15,000 to $20,000 in payments over the 2 to 3 year buy down. Okay. So huge savings for the buyers, money they can put in the bank. And if they refinance out of it, I'll touch on where we think rates are going. If they refinance out of it or sell the property before the buy down funds are used, it goes to pay down their principal. So it's their money. So it's a true savings for them. You asked about where we think rates are going. Prime Lending is a national mortgage bank. We have a big secondary marketing team. They think once the feds get ahead of inflation, and inflation comes down, that we'll see rates probably come down as well. Could be as soon as the second quarter of next year. So that's promising. And so hopefully we'll see some normalcy when rates start to ease back down again. Hopefully some more inventory comes on the market. I think I saw the National Association of Realtors posted a stat that there's 1.3 million homes for sale nationally right now. And I think the normal's 2.5 million.
Yeah.
So still need to see a lot more inventory. So going to next year, hopefully we're going to see rates ease and some more inventory come on the market, which will help affordability. And I'll show this one more slide if I could.
Yeah, please do.
We call it our, am I still sharing? Can you see that?
No, you need to reshare.
Need to reshare. Hold on one second. We have rolled out what we call the rate redo.
Oh.
So let me just pull that up here. Can you see that?
No, not yet. Let me see.
What screen am I on?
I see just your face.
Is my face? Hold on, let me try to share it one more time.
And for, sellers out there, I don't think that that's a bad thing, right? Because you could still get over market price for your home, not list price, sorry, over market price for your home, and then still help that buyer with that rate buy down, right?
Great point. Great point. So what we're seeing is buyers agents and selling agents get together and kind of not just negotiate the price as far as an accepted offer, but also talk about the buy down, the subsidy amount. So that way they can negotiate into the price. So that way the seller can still hopefully net what they want to net, and the buyer still gets the advantage of the buy down.
Absolutely. So that's my point. So for the sellers out there, don't freak out about this, right? It's a great thing for both parties. So, everyone's going to benefit from this.
Great point. Absolutely. And if you can see it now, do you see the rate redo?
I can.
So Prime Lending just rolled this out. So anybody that closes a loan from now all the way through March 31st, so the first quarter of next year, will be eligible for what we're calling our rate redo. So after March 31st, anytime after that till the end of next year, we will refinance them with no lender fees at all, no appraisal fee, which is a very, very nice cost savings. So what we're basically saying is, hey, we're hoping that the rates come down next year. And when they do, we're going to do the rate redo, do a very inexpensive refinance and get you that lower interest rate. So you'll see the post, Kelly, going out right now that marry the house and date the rate.
Yeah.
So it's still a good time to buy if you find the right home and can negotiate the right deal for yourself if you're a buyer out there right now. And just know that you're not going to have the rate forever. You hopefully have the dream home forever, but you date the rate, we'll refinance, get a lower rate down the road and save money that way.
Absolutely. Absolutely. So, wow, that's awesome. And this is, I'm so excited to tell my buyers about this. This is because a lot of people, again, they're nervous because the rates are high, but if I can refinance come second quarter next year, that's great.
Yeah, Kelly, I think it's all about between agents like yourself and lenders. We need to educate buyers right now, educate other agents if you're negotiating these deals in these programs, because if the clients and the buyers have the education, they have the data, they have the information, they can make a good decision because there is good options out there to still help them buy a house right now.
Absolutely. Absolutely. And for sellers, right, like we just spoke about, for that listing agent to know about this stuff, to help their seller as well, because there's a lot of sellers right now that are getting less multiple offers, right? They saw the crazy house market and now they're getting offers and people are asking for credits and they just don't understand it. But dialing into this kind of stuff is going to be really helpful for everyone. So
exactly right.
Awesome. Well, any final words before I leave? Before we leave, sorry.
I think we covered the bullet points, but again, if it's the right home for you, it's still a good time to buy, and we have plenty of programs and options. So reach out to your preferred lender, and we're here if needed, and I'd be happy to help.
Yeah, absolutely. And I'll include Larry's information so that way everyone can reach out to him. They have a great marketing department. Not only are they fantastic with loans and their programs and service, but their marketing is great as well. So I would love to connect you with Larry and get more education and help your buyers.
Awesome. Well, it's easy when we're working with good agents like you, Kelly, and you and Jeff. So.
Well, thank you. I appreciate it.
Thanks for the kind words.
Nothing but the truth. Nothing but the truth. All right. Thank you.
All right. Happy Friday.
Happy Friday.
Bye-bye.